Big changes are hitting the UK's crypto landscape, and if you think this is about protecting investors, think again. Behind the polished speeches and policy papers, the government is moving to take control, tighten its grip, and decide who gets to use digital assets and who doesn't. From new regulations to roadblocks and even sanctions, it's becoming clear that this isn't about freedom, it's actually about control, so let's break it down. In April, HM Treasury dropped new draft legislation to pull qualifying crypto assets and stablecoins under the same laws that govern traditional finance. Now, on paper, it actually sounds like a step towards legitimacy, but in reality, it's a permission slip from the government. No authorization, no business. And the government is now running consultations that look more like restrictions. They're talking about banning retail borrowing for crypto, limiting stablecoin issuers to UK-based companies only, and keeping overseas stablecoins like USDT and USDC outside the scope. And so essentially what they're trying to do here is lock UK investors into their preferred system. Now, you can forget MiCA for the time being, which is the EU's rule mindset. The UK has chosen to model this on kind of the way that the US is doing it, which is vague, sort of sprawling regulation built into existing financial laws. That means that the government can pick and choose winners while everyone else gets tied up in red tape. Now, the government has beefed up its enforcement team, working within the FCA or Financial Conduct Authority, adding what I call dedicated crypto cops to hunt down illicit actors. So there'll be arrests, raids, fines, and the message is clear. If you do not play by their rules, they're coming for you. And if you do play by their rules, then good luck, because approvals now take an average of around 300 days, so almost a year. And that's if you get approved. You know, if your firm gets rejected, then the average time that the process drags on for is around 500 days. So this doesn't feel like any kind of path towards innovation. It feels like a wall that's basically designed to keep most projects out. Now, on August the 20th, the UK slapped sanctions on Kyrgyz firms and a Luxembourg company tied to a ruble-pegged stablecoin network, and officials are claiming that it was used to process $9.3 billion in Russian-linked transactions. But there's more going on here, because crypto is being weaponized and brought into geopolitics. Governments are not just targeting bad actors, but they seem to be cutting off kind of entire regions and deciding who is allowed to actually move money on chain. And the government likes to argue that this is will bring financial stability, but really it's financial censorship on a global scale. And it isn't just the governments or the regulators, because UK banks are also quietly waging their own war. Reports show that 40% of UK investors have had payments to exchanges blocked or delayed, and of course the banks claim it's fraud prevention. But I think investors now and the average Joe is starting to pick up and learn the truth, which is more to do with shutting down or shutting the door on financial independence. And in practice, this means that your hard-earned money isn't really yours. If you want to use it to buy crypto, then you need to check with the bank whether you're allowed or not, and then they'll decide if you can. So that doesn't sound like protection, it sounds like control. And we have to look at who really benefits here, because the government tell us that they want a safe, thriving crypto sector, but every new rule, every banking restriction, and every kind of sanction points in the opposite direction. They want a walled garden, one where only approved players, approved coins, and approved transactions are allowed. So for everyday investors like you and me, it's a reminder that the system does not want competition. They will say it's about consumer safety and consumer protection, but the truth is simpler. it's about power. So the UK is dressing up its crackdown as progress, but behind the headlines, it's clear they're not building a free crypto market, they're actually building a controlled one. And 2026 is shaping up to be a turning point, not just for crypto adoption, but for the fight over financial freedom itself. So the question is, when the government tightens the net, will investors comply or push back? That's it for today's episode. Thank you for watching, thank you for listening, and I'll see you in the next one.